Well, good morning. This is Michael Douville. It is November 14th, 2020. I'd like to talk about the fact that we are building income streams and investments for use before you get to your retirement age. Now, I'm a great proponent of qualified plans. I think everyone should have an IRA or a 401k or a SEP IRA, whatever you and your company can put together or for yourself. And I think this is a wonderful place for you to invest because I'm in the real estate business. However, I don't believe all your investments should be in the real estate. You should diversify a bit, and your financial planner should be able to help you with that. Also, when you take your money into a qualified plan at the end of the year, if you put $30,000 into a qualified plan and you're in a 30% tax bracket, which is pretty easy to be in. So you put $30,000 in, you're going to save $9,000 in income tax. So that's a 30% return immediately just by putting money into a qualified plan. And of course, you can put your reserves in there, and it's a wonderful place for you to have cash, have some money, have some availability, and it's in a qualified plan. It's going to go towards your retirement. You can build a very nice nest egg. Now, the problem with going into a qualified plan, of course, is that they have age restrictions to them. You can't really access these funds. You can in an emergency. You pay a penalty for it. They do have some things, you have to talk to your plan administrator, but oftentimes you can borrow from them. They have places you can, first-time homes, you can take money out of the accounts for that. But this is more of a reserves, and it's going for your retirement, which then has an age to it, most of which is 59 and a half. That's where you have a retirement age. Now, my book, How to Create a Real Estate Money Machine and Retire with Income, is geared for you to retire at any age. It then becomes a financial decision, not an age decision. And in order to build a portfolio outside your qualified plans, gives you immediate benefits. So if you're 30 years old and you can build this portfolio, you can do this in relatively few years. And as soon as you start getting 3 or 4 or 5 properties together, the benefits start compounding and you really start feeling benefits. One of the nice things about a real estate investment portfolio is that we have tax benefits almost immediately. Well, not almost, you do get them immediately. So you can start depreciating your property and start saving money on your taxes, which as you get to be a little older, here's where we have a great source of expenses, our taxes. If we can go ahead and do deductions and depreciation and avoid those taxes, it's just like finding money and really helping out your net worth. And if you can get 3 or 4 properties going, then you really start getting cash flow, depreciation, and you have capital buildup via appreciation, but also because we have principal reduction going on and you're owing less and less money as you go along because your tenants are paying down the loan balance. So this is just wonderful outside of a qualified plan. And of course, we get cash flow. The longer you hold the properties, we have enjoyed a huge run up in rents. In the last 4 or 5 years, they've gone up a lot, but they have been consistently going up for the last 40 years. So even if they go up like 3.98%, which is what we've enjoyed for the last 40 years, we've just been spoiled the last 4 or 5 years because we've had anywhere from 5 to 10% rental appreciation, and that goes directly into your income. So if you raise rents 5%, that means that you're going to get a whole lot more income because you get to keep virtually all of the increases. Now, I often spout about the fact that if you have 10 properties, if you raise the rent $100, 100 times 10 properties is $1,000 a month times 12 months out of the year. It means that if you raise rents $100, you're giving yourself a $12,000 a year increase in your income. And we've enjoyed $150, $200. So just think of that. And this is consistently year over year after year. So how would you like to have your income go up $10,000 each and every year for 5 or 6 years? That would make a significant difference, and that's what we're enjoying. I also want to address the fact that we also do a triad approach, because when you do get to a age like myself, when you get to a retirement age, you get Social Security. You can keep your income coming in from your rentals, and they're going to keep getting better and better and better. And of course, if you held them for 30 years, like a lot of my clients have, they're now free and clear, and they're getting the increase. That payment is now coming to them, and they've really got some cash flow coming off for their property. So if you have 10 free and clear properties here in Maricopa County, you're looking at about $120,000 to $150,000 net after you pay your taxes, insurance, and your property manager. And this is yours. You get to keep $120,000 to $150,000 after everybody gets paid, and you've put together a repair escrow, and you've accounted for vacancy and cost of sale. So virtually everything that you're going to run, you're still going to be getting about $120,000 to $150,000 net a year. You get Social Security for another $40,000 or $50,000, so you could be $160,000 to $180,000. And if you've been following the work and have a nest egg put together in a qualified plan, you can be getting another $20,000 to $50,000. So you can easily have $200,000 to $250,000 a year in income coming in when you retire. And of course, when you retire, then you're going to live for 20 or 30 years. And this is going to last you a very, very long time. Your rental is going to last basically forever. So if this is anything that we can help you with, you're welcome to have your financial advisors call us. Please talk to your financial advisors. Talk to your spouse. We do this all the time here in Phoenix. If we can help in any way, you're welcome to get hold of me, Michael at michaeldeville.com. My very best to you. Bye-bye now.